For info only, not financial advice. Welcome to the deep dive.
Oh, yeah.
You're with ChannelVest.
This is your analysis.
Let's get into it.
This report explores the future of investing using ETFs.
ETFs.
Exchange-traded funds, those handy bundles of stocks that offer diversification and target specific investment areas.
Right. Like a basket of stocks, but way more focused.
Think of it as a shortcut to a diversified portfolio. Are you ready to uncover the secrets to dominating the market in 2025? Stick around.
Buckle up. This report is packed with exciting trends and specific ETFs that could reshape your investment strategy.
So are we talking like totally changing the game here?
Oh, absolutely. We'll break down the complexity of these trends into bite-sized pieces you can actually use.
Okay, let's unpack this. The first trend is the rise of thematic ETFs. This is insane.
Thematic ETFs. Tell me more. Forget old-school sectors. Thematic ETFs let you invest in specific transformative themes, like clean energy, AI, and cybersecurity.
So instead of just investing in the broad energy sector, you can zero in on companies specifically focused on clean energy solutions.
It's like investing in the future, right?
That's right. Thematic ETFs allow you to align your investments with your vision of the future. Instead of broadly investing in technology, you can pinpoint specific areas like cybersecurity, which is increasingly important in our digital world.
So instead of just buying a broad tech ETF, you can now laser focus your investment in a specific theme. That's incredible.
Exactly. And the report highlights two ETFs that are leading the charge. Global X Clean Energy ETF with the ticker symbol ICLN, and First Trust NASDAQ Cybersecurity ETF, or CIBR.
Wait, hold on. What's a ticker symbol? I'm still kind of new to this.
Oh, of course. A ticker symbol is a unique code that identifies a publicly traded company or ETF on an exchange. Think of it like a shortcut to find the specific investment you're looking for.
Got it. That makes sense. Now, back to these thematic ETFs. You won't believe it. The report says ICLN has a one-year return of 13.31%, and CIBR boasts a whopping 29.11% return in the same period.
Yeah, those are some pretty impressive numbers.
What's driving these impressive returns?
Well, if we take a look at the top holdings of ICLN, we see companies like NFA's Energy and First Solar, major players in the solar energy industry. And with the increasing demand for renewable energy sources, it's no surprise that this ETF is performing well.
This is huge EE. So I can basically ride the wave of clean energy adoption just by investing in this one ETF.
You got it. And it's not just about the financial gains. You're also contributing to a more sustainable future by investing in companies that are actively working towards a cleaner world.
Wow, that's really cool. What about CIBR, the cybersecurity ETF? What's fueling its growth?
Well, think about it. With cyber attacks on the rise, companies are investing heavily in cybersecurity to protect their data and systems. CIBR holds companies like Palo Alto Networks, a leader in cybersecurity solutions. As businesses continue to prioritize cybersecurity, CIBR stands to benefit.
This is mind-blowing. It's amazing to see how these ETFs offer a way to tap into these powerful trends shaping our world.
Right, it's like investing with a purpose, aligning your portfolio with the future you want to see.
You're with ChannelVest. This is your analysis. Don't forget to subscribe to our channel for more exciting deep dives into the world of finance and investing.
Definitely hit that subscribe button so you don't miss out.
And tell us in the comments what themes resonate with you. What kind of future do you want to invest in?
We'd love to hear your thoughts.
Now, moving on to our next game-changing trend,
Sure.
ESG investing. ESG stands for environmental, social, and governance factors.
ESG, right. Everyone's talking about it these days.
It's about investing in companies that are not only profitable, but also prioritize ethical and sustainable practices.
Yeah, it's not just about the bottom line anymore. Investors are looking at the bigger picture.
Wait, ESG investing? You mean those environmental and social responsibility things everyone's been talking about?
That's right. And it's not just a feel-good thing anymore. Investors are demanding that companies be ethical and sustainable. It's becoming a mainstream investment strategy.
So it's not just about making money, it's also about making a positive impact on the world. I love that. But are there actually ETFs that focus on ESG?
Absolutely. The report highlights two leading ESG ETFs, iShares ESG Aware MSCI USA ETF, or ESGU, and Vanguard ESG US Stock ETF, which has the ticker symbol ESGV.
This is insane. So I can actually invest in companies that are both profitable, AD doing good for the planet and society.
Precisely. And you might be surprised to hear that these companies are often better positioned for long-term success. They are managing risks related to climate change, social inequalities, and corporate governance issues, making them potentially less risky investments.
You're saying that companies that are good for the world can actually be Good for my portfolio, too. Stick around. This is where it gets really interesting.
Yeah, they're really leading the way.
Okay, spill the tea. What kind of returns are we talking about here?
Hold on tight. ESGU has a one-year return of 27.98%, and ESGV is right behind it with a 27.98% return as well.
Wait, they both have the exact same return? That's crazy. What companies are they investing in?
Well, if we look at the top holdings of these ETFs, we see familiar names like Microsoft, Apple, Amazon, and Nvidia.
Oh, yeah, those are like the big dogs, right?
Exactly. These are industry giants that are also incorporating ESG principles into their operations.
So these companies are proving that you can be both profitable and responsible. This is mind-blowing. It's amazing to see how investors are driving real change in the corporate world.
It's a powerful shift in mindset for sure.
You're with Channel Vest. This is your analysis. And be sure to smash that like button and leave a comment if you're as excited about ESG investing as we are.
Let us know what you think about this trend.
Now, let's move on to a trend that's making investing more accessible. The democratization of alternative investments.
Okay, democratization. That sounds interesting.
Alternative investments, you mean like hedge funds and private equity? That stuff always seems so exclusive, like a secret club for millionaires.
Yeah, that's the traditional view, right? But things are changing.
Exactly. But here's the bomb. So ETFs are breaking down those barriers, making alternative investments accessible to everyone.
ETFs opening up access to those exclusive investments. Tell me more.
Wait, are you serious? So regular people like me can now invest in things like hedge funds and private equity.
Not exactly hedge funds, but ETFs can now give you access to other asset classes that were previously difficult to invest in, such as gold and real estate.
You're kidding. So I can invest in things like gold and real estate without having to buy actual gold bars or property.
That's right. The report highlights two ETFs that exemplify this trend: iShares Gold Trust with the ticker symbol IAU and Real Estate Select Sector SPDR Fund, or XLRE.
This is huge, Erie. So how do these ETFs work? Do they actually own gold and real estate?
Well, IAU tracks the price of gold by holding physical gold bullion. So when you invest in IAU, you're essentially investing in gold without the hassle of storing it yourself.
Wow, that's really convenient. And what about XLRE? Does it actually own buildings and stuff?
XLRE tracks a specific index of real estate investment trusts, or REITs, which own and manage income-producing real estate properties. So by investing in XLRE, you're gaining exposure to a diversified portfolio of real estate holdings.
So instead of buying a rental property, I can just buy shares of XLRE and get exposure to the real estate market. This is revolutionary. What kind of returns are we looking at here?
You won't believe it. IAU boasts an impressive one-year return of 14.63%, and XLRE has a one-year return of 11.41%.
Wait, hold on. I can get those kinds of returns without the headaches of being a landlord or storing gold. This is insane. What companies are included in XLRE?
XLRE holds some of the biggest names in real estate, like American Tower and Prologis. These are companies that own and operate massive real estate portfolios.
This is incredible. It's like having a slice of the entire real estate market in my portfolio.
Exactly. And this trend is all about giving you more options and control over your financial future. It's about leveling the playing field and giving everyone access to the same investment opportunities.
This is where it gets really interesting. Who needs a hedge fund manager when you can build your own diversified portfolio with ETFs?
Exactly. You have the power to shape your own financial destiny.
Now prepare for a mind-blowing revelation. We're about to enter the realm of AI and big data in ETF management.
Ooh, AI and big data, and now we're talking.
But hold on tight. AI is taking over the world, and now it's coming for our ETFs. Tell me more.
AI-powered ETFs are using complex algorithms and data analysis to make smarter investment decisions. It's like having a supercomputer as your personal financial advisor.
This is wild. So AI can sift through mountains of data, spot trends we humans might miss, and pick the best stocks for our ETFs.
Precisely. The report highlights one such ETF, AI-powered equity ETF, with the ticker symbol AIEQ. This ETF uses IBM's Watson artificial intelligence platform to analyze massive amounts of data and make investment decisions.
Wait, IBM's Watson, the supercomputer that won Jeopardy, that's the AI picking stocks for this ETF. This is insane. How is it even possible for a computer to pick stocks?
Well, AIEQ's algorithms can analyze thousands of companies each day, looking at factors like financial data, news articles, social media sentiment, and even expert opinions.
Wow, it's like having an entire research team working around the clock.
It then uses this data to identify patterns and trends that humans might miss, and it makes trades based on these insights.
So it's like having an army of analysts working 24/7 to find the best investments. You won't believe it? What kind of returns are we talking about here?
AIEQ boasts a one-year return of 28.34%.
Whoa, that's seriously impressive. But isn't it risky to trust a computer to manage my money?
That's a valid concern. But remember, AI can also help manage risk by identifying potential market downturns and adjusting the ETF's holdings accordingly.
So it's like having a safety net built right into your investments.
Exactly. AI can analyze market data, economic indicators, and even social media sentiment to make smarter, more informed decisions. It's like having a crystal ball for the stock market. But of course, like any investment, there are always risks involved.
You're with ChannelVest. This is your analysis. Don't forget to subscribe to our channel for more mind-blowing deep dives into the future of finance.
Hit that subscribe button and join us on this exciting journey.
Now let's talk about the rise of the robots. Robo-advisors, that is. They're here to shake up the traditional financial advising industry. Robo-advisors. Those automated platforms that build investment portfolios for you. But are they really as good as a human advisor?
That's the million-dollar question, right?
Well,
Can a robot really replace a human financial advisor?
Hold on to your hats, because the answer might surprise you. Robo-advisors are using cutting-edge technology and, you guessed it, ETFs, to create personalized investment strategies based on your goals and risk tolerance.
So it's like having a personalized ETF portfolio built just for you by a robot.
You mean I can tell a computer what I want to achieve financially, and it will build a custom ETF portfolio just for me?
Exactly. And the best part is, robo-advisors are typically much more affordable than traditional human advisors. No more hefty fees eating away at your returns.
So which ETFs are these robo-advisors using to build these amazing portfolios?
Think of ETFs like Vanguard Total Stock Market ETF, VTR, and Vanguard Total Bond Market ETF, BND. These are broad market ETFs that provide a solid foundation for any diversified portfolio.
Let me guess, these ETFs are killing it in terms of performance.
You bet. VTI has a one-year return of 27.12%, and BND boasts a 2.93% return for the same period. Not too shabby for a hands-off approach to investing.
It's incredible. It seems like robo-advisors are making investing easier and more accessible than ever before. Stick around. Are there any downsides to using robo-advisors?
Yeah, there are a couple of things to consider.
So tell me more about these downsides. What should people watch out for?
Well, robo-advisors typically rely on algorithms and models which might not capture the nuances of your personal financial situation.
You mean like sudden life changes, job losses, surprise inheritances, those kinds of things?
Exactly. These platforms might not always provide the same level of personalized advice and emotional support that a human advisor could offer.
That makes sense. Something you just need to talk to a real person, especially when things get complicated.
Right. And remember, while robo-advisors are great for beginners, they might not offer the same level of sophisticated strategies as a dedicated financial advisor, especially for high net worth individuals with complex financial needs.
So it's all about finding the right balance, knowing when to use technology and when to seek out human expertise.
That's the key takeaway. These 5 ETF trends: thematic investing, ESG integration, democratization of alternatives, AI-driven management, and robo-advisory expansion are reshaping the investment landscape.
It's an exciting time to be an investor. But as we've discussed, it's crucial to stay informed, do your research, and choose the strategies that align with your individual goals and risk tolerance.
Absolutely. It's all about empowering yourself to make informed decisions.
You're with ChannelVest. This is your analysis. And that's a wrap on our deep dive into the future of ETF investing. Don't forget to hit that subscribe button and leave a comment below telling us what trends you find most exciting.